Hello, everyone. Good evening. Hi, Alaa. Hi, Achille,
Hi,
Jida,
Achille.
and everyone from the Global Innovation Institute. Thank you very much for this community. So today we would like to welcome you for the second Finance and FinTech Community gathering. And I would like to thank every one of you who joined us today. This space is all about creating a solid knowledge. It's about the financial industry and what's going on with the fintech realm. And we want to together forecast the future and to continue to bring thought leadership, fresh perspective, and real insight into what's disrupting the future of finance. So today is a special day. First of all, this is our first guest speaker. Someone who works and intersect with technology, finance, and innovation. Today, our session is titled AI, Quantum Computing, and the Future of Finance. And this is a very, very critical theme today. Around the world, the financial institutes are rethinking how to use AI to assess risk, allocate capital, and make strategic decisions. And technologies like AI, blockchain, and quantum computing are rewriting the rules of the game. I'm delighted today to introduce Achille Yomi, the co-founder and CEO of ScenarioX, a pioneer platform that leverages AI, machine learning, quantum computing, and cloud technology to help financial institutions make faster, smarter, and more resilient risk decisioning. Achille will walk us through how AI and quantum computing are disrupting, enabling next generation risk modeling and portfolio optimization. And more important, what this means for the future of the financial sector. So before we start, quick notes. Please write your questions and we will take it through at the end of our conversation. And after that, we would love to hear your feedback and let us know what topics do you want to explore in the next session. So once again, thank you for being part of this community. Please join me to welcome Achille Yomi. The floor is yours. Thank you.
Thank you very much, Iffat, for this warm welcoming and this presentation about myself. What I've done when you actually approached me to ask me about this this session, I reflect on this, and then I thought, well, it would be good to put together maybe just 4 or 5 slides that will actually support the conversation that we're going to have. But what I would like is really to have this as an interaction, because it's all about looking at what innovation means for financial institution, but also understanding the perspective of others so that we can really build the future all together. So I will start sharing my screen about this slide that I'm talking about so that we can go to it together. Do you guys all see my screen? Yes?
Yes. And if you want to give us an introduction about your background, what did you do before previous ScenarioX, and we can move forward. Thank you.
Yes, I would do that. I would do that by, yes, this is where I will start by telling you a little bit about myself, but also about ScenarioX. So I've been working in banking for over 17 years plus before actually creating ScenarioX in 2022. And my role in financial institution was actually to build a risk model, financial model, to help those institutions to monitor and evaluate the risk that they're taking in terms of investment. So I've been working with institutions like BNP Paribas, with HSBC, with Standard Chartered, helping them to do exercise like stress testing, which involve creating and building very sophisticated model. And based on that expertise and experience, I decided in 2022 to actually build a platform that will help those institutions to do a better risk estimation, leveraging on technology. Technology here means leveraging on AI/machine learning, but also in quantum technology, here focusing more on algorithm development. Because as you know, and we will talk about that a bit later, quantum is really about the hardware, but also the software. So we can talk about that later. We are focusing more on the software side. Now, who are we? ScenarioX is it's been created in 2022. We have three global presence. We are in Switzerland. We are a Swiss-based company. But also having a presence in Singapore, where we are having a quantum center of excellence that we are actually developing over there. And we are also developing very, very fast our deployment in the MENA region with our hub base in KSA. We are currently incorporating our regional office in Riyadh. And the good news here that we can share is that the name of the entity in Riyadh is going to be ScenarioX Noor. So it's a bit the connection between simulation and the light, I guess. But this is what will be on in the kingdom.
I believe yesterday you told me I will announce something. So this is the announcement, right?
Well, this is part of the announcement. We have the name that has been approved and accepted by the MISA, and now we are just waiting for the registration number to be completed, and then all the process for the general management and so on will be also following. But the good news is that we have already a name of the entity in the KSA that has been approved, and then we are keep moving forward with more development to come. I think there are going to be more and more announcements coming in the coming days. So stay tuned, I would say. So thank you very much. So what we do, what is it that we do? As I mentioned, we are helping those institutions to do simulation. It comes from the fact that in finance as a whole, there's zero analytical solution. Everything when it comes to metrics, it's always about approximation, especially when you come to risk or simulation. It's all about approximation. And then we say what will be the best way to do those approximation in order to do the calculation of risk that those institutions are taking is to do different scenario, and those scenario are what is actually the driving force of the platform that we built. So we are currently a bit above 10 professionals working at ScenarioX. We have more than 25 scenarios in our platform. You can do 3 different products, which are scenario projection, portfolio risk optimization, and financial modeling 360. We've been successfully doing some pilot in the kingdom, in the region. So yeah, we are really growing very fast in terms of development in the region. More announcement to come. Now, what I would like to focus today is really about the team. The team was really about the finance and fintech innovation and how it's actually the innovation is actually transforming finance. So the question I was asking myself is, if there were 3 technologies that are actually impacting the most finance today, what would be those technology? So everyone know about the crypto money, for example. But what is more important is the technology that you have behind that or the cryptocurrency that you know. And the blockchain technology and the digital infrastructure is really what is driving those technologies. So for me, that is really one. And the other thing that everyone is actually talking today is AI. So AI, but more focusing on the interface, I would say, because there are more. Say if you're talking with a chatbot, with the agent, and also so on. Well, this is what people are really thinking of. But in finance, AI is more like AI/machine learning, because it's really about using a lot of data in order to find pattern, in order to do simulation, in order to find anomaly, in order to predict what could be the potential impact on the exposure that those institutions have. So that's really what really matters to them at some point. And then you have the third one, which is quantum computing. And then here you are talking about, first of all, how do you bring speed in the way that you're doing those computations? Because one of the key challenges that the financial institution have is really about the speed when they are dealing with thousands of data. So how do you then quantum can actually help in order to do those computation very, very fast. But it's not a question of waiting for quantum like in 10 years time. It's really about saying, okay, what is it that we can already do today with quantum and have some real advantage. Later on, we will see what are the different things that are happening. But here it's really to say, okay, those three technology are really the technology that will really transform tremendously finance in the future. And things are happening really on that sense. And up to the point where we're going to be having quantum pretty much everywhere. Imagine every financial institution having his own quantum hardware where they are running multiple simulation and having insight information on the decision that they want to take. So I think for me, those are, to set the stage, this is really, these are really the three main technology that will actually transform the financial institution in the coming years. Now, here I would like us to really focus a little bit more in AI and quantum, because this is where we see that the transformation can be very, very impactful as well. Because when it comes to simulation, when it comes to pricing, when it comes to predictive analysis, AI, quantum, the technology that will really drive that very, very significantly. So one point that we could mention here is the what we call quantum enhanced machine learning, where you actually leverage on quantum simulation, circuits, in order to do better machine learning algorithm and have more predictive accuracy, more accuracy in your prediction. Some example are the one that we've seen with that we're going to talk a bit later with HSBC and other financial institution. But you're also doing portfolio optimization. Other things that a financial institution have to do in order to take advantage, to perform well, is optimizing their portfolio. And when you do portfolio optimization, there are two different stages. The first stage is really about the selection. So how do you build algorithm that would actually be very, very good and effective in selecting the portfolio that you want to optimize, or the security that you want to put into your portfolio, just to put it somewhere. And you have an institution like Toshiba, who are building, who have a quantum simulator that's called SQBM Plus, for example, that help to do that selection very, very effectively. But you also have D-Wave, which are also quantum provider who are very, very good in terms of portfolio optimization. But when it comes also to simulation, because in order to have a very, very good prediction of what could actually happen in the future, you need to do multiple simulation. And for that, you do scenario analysis, and in order to capture and analyze the complexity of financial system. You have interest rate dynamic, you have volatility clustering, you have Monte Carlo simulation that need to be run, and all these need to be done in a very, very optimal manner. And that optimal manner, quantum can actually help you to do that. And it's not about, it's really about them. A good example here is when you use, for example, random numbers. Random numbers are used very, very often in finance, simply because most of the finance calculation are approximation, and then for those approximation, you need to do to generate random numbers. But one thing that those random numbers those classical random number one kind of limitation that those classical number have is the fact that at some point they're becoming more and more correlated, and therefore you can leverage on the fact that quantum random number are more pure compared to classical one, and have some simulation that would be much more precise compared to the classical one. So we at ScenarioX have done some example on that, which we will talk a bit later. Now, the other point that I would like to share also with you is the readiness. What is really happening? Because many people know that finance are sometimes, I find in the finance industry, banks and financial institutions as a whole, they're very slow sometimes to use innovation. But I tend to say that this was maybe 10 years ago or even 15 years ago. Today, they are more and more fast in using technology and innovation. You've seen recently HSBC and IBM announcing that they've used quantum embedded trading. They use quantum in order to do prediction of bond trading, so that will actually improve by 34% the prediction of the bond trading rate compared to the classical model. So this is really, really something concrete. It's not something anymore theoretical. You have the same with HSBC again, doing quantum encryption, where they are securing foreign exchange transaction with quantum key distribution. So this is really concrete again. You also have other institutions like JP Morgan, Citi, and also Mizuho, who are building really teams of quantum physicists who are using and leveraging on quantum algorithm in order to do estimation much more better. For example, for Mizuho, they were doing that for operational risk analytics and estimation. For Citi, they were using QAOA for portfolio allocation. Previously, I mentioned about the portfolio selection, where you can use actually SQBM Plus from Toshiba, but here this algorithm, the QAOA algorithm, can help for portfolio allocation, and Citi has been doing some work on that with AWS. So you see that today things are really happening. And then if you look also financial institution in the kingdom, guess what? Most of them have now innovation lab where they are actually testing and trying to see how innovative technology will actually help them to take some advantage and don't be left behind. Because at the end of the day, if you're not capturing or you're not integrating technology, you will be left behind, and worst thing can happen. So things are. This slide is really to say things are happening, and many financial institutions are really moving forward. And then you also have big organization and regulator who are really supporting that. You have in Singapore, the Monetary Authority in Singapore, who is really supporting institution. In the US, you also have a lot of investment that are going into quantum as well. And even in the Kingdom of Saudi Arabia, you've seen Aramco and Pascal doing some development and with the using of quantum hardware. So things are happening. It's not tomorrow, it's actually happening today. So the last slide that I wanted to really share with you is a bit what is it that a startup like ScenarioX can actually do in that field. It's really about leveraging, we at ScenarioX are domain experts. So we understand the field of finance. We understand the modeling that financial institutions have to do. We understand how the current classical model works. So therefore, what we are trying to do is to say, okay, from those classical processes that are existing today, simple, how do we leverage AI/machine learning, quantum, with the current stage that we've seen in order to bring advantage? And that advantage could be in terms of precision, better predictability, but also in the long run, speed in terms of computation. And we've done some concrete use case in that sense. We actually have built a framework from quantum value at risk, for example, estimation, because as you know, for value at risk estimation, you have 3 different methodology for doing that calculation, historical simulation, which all the financial institutions are using, but you also have um, I would say a more theoretical approach, which is a log normal approach that we call. And then you have Monte Carlo simulation, where you need to generate a lot of random number in order to do the estimation of your value at risk, because you have to do different scenario, and for those scenario, you need to generate multiple random numbers. But the difference here is classically those random number when you generate, let's say 10,000, at some point you start having some correlation between the numbers that are generated and there. And but with quantum, you have a better random number that are generated. They are pure. Let's put it this way. And then with that purity, you have a better estimation. So we've used that in order to do this quantum value at risk framework, and it's actually bringing with in comparison to classical, a better estimation. You have sometime between 5 to 20 basis points difference between the classical and the hybrid quantum value at risk estimation. And this is very, very concrete in finance, because if you have a portfolio of, let's say, 20 billion, for example, a 5 basis point difference can be really significant. So these are the kind of use case we are doing also but also in terms of scenario simulation, because you have, for stress testing, you have to do simulation, you have to do scenario, and then for those scenario, you can also leverage on Monte Carlo simulation to do those predictive analysis. Another case that we are currently doing at ScenarioX is with a partner, Toshiba, where we are doing this portfolio optimization. But the first part of portfolio optimization, which is around portfolio selection, asset selection for the portfolio, and we are leveraging on the SQBM plus simulator in order to do this selection of security. So many things are happening. We are helping financial institutions in order to bridge that gap. For those who cannot have already their quantum unit, we can actually help in order to support them navigating and bridging the gap, and having already some real use case that would be that could be used internally to take this quantum advantage that will be coming more and more often. So Yeah, so this is a bit what I've prepared in order to give you a little bit sense of what is happening, what others are doing, how ScenarioX is actually in embedding the technology in our platform in order to support our customer and clients. So now, if there's any question, I think I'm ready to jump in. Pass it back to you, Iffat, in order to move to the next step. Thank you very much.
Thank you very much. It was very insightful. There is, I think, a lot of questions popping up. So do you want us to go through it, Alaa? We cannot hear you, Alaa. Yes.
I'm sorry, now
No
you can
worries.
hear me?
Yeah.
Okay. Hello, everyone. We can just go with the first question. There is a question from Rashid. Rashid is asking, how can quantum computing improve risk modeling and portfolio optimization compared to the current methods? This is the first question. And the second one, are there any real-world examples where quantum computing has significantly enhanced financial predictions or risk evaluations?
Okay, so those are a very good question, which I start giving a little bit answer in my presentation, but I can elaborate a little bit more. When it comes, for example, for portfolio optimization, in portfolio optimization, you have two levels. You know, the first level is really about the portfolio selection, and then the second level is really about the portfolio allocation. So you select, for example, if you say you're an equity asset manager and then you need to build a portfolio, an optimal portfolio, what you need to do is to build algorithm that will help you to do the selection. And then for do that selection, it could be very, very complex because it involves building a lot of constraint for selection of those different security. And quantum can really help you. For example, for instance, the SQBM plus machine can help you to really formalize that problem more efficiently. And for that formulation of the problem, you will be able to have the selection very, very fast. One a good example that we've seen with the use case we've done with Toshiba was the fact that for portfolio selection, it will take you actually some asset manager run, it take them 30 hours in order to run their algorithm for asset selection. But with SQBM Plus, we are actually demonstrating that it would actually bring that to very, very lower, less than 5 hours, I guess. So these are the concrete use case when it comes to portfolio optimization, specifically on the allocation, also the selection part. And on the allocation part, there are cases that has been done by D-Wave. I don't recall exactly the detail here, but those cases of portfolio allocation are actually bringing also significant value for those who are using them. Now, the second question was around.
What are the real world examples where the quantum computing has significantly enhanced the financial prediction or the risk evaluation?
Yeah, so I mean the concrete real world is the good example is actually HSBC, I would say. I mean the recent and good example is actually HSBC. Last September 25th, you know, they mentioned that they announced the result of their trial with IBM where quantum classical hybrid method were used for algorithmic bond trading, and they were able to show 34% improvement in prediction of trade file probability in compared to classical approach. So this is very, very concrete. And we also at ScenarioX, we've done this value at risk estimation, and we are able to really see the concrete gap between the classical and the hybrid quantum approach, which is between 5 to 20 basis points. So this is very, very concrete. What I would like to share here is the transformation. I mean, every calculation in finance are actually processes, and it's really about improving a part of that process in order to see if it brings value to the whole process itself. And today there are cases that you can already do. For example, quantum random number is really one starting point that anyone can use. You don't need to have tens of thousands of qubits in order to already test that. You can really test it and see if that really brings value to you. We've tested it, and then we've seen that it brings value for value at risk, for example, calculation. So these are concrete use case.
Thank you so much, Achille. Thank you so much again. We hope, Rashid, that Achille has answered the questions that you have asked. I'll just move forward to the other question from Arish. Arish is asking, why to move from classical computing into quantum computing? What are the available uses that leverages this technology?
Well, this is a very, very interesting question. Is and that's essentially is, and I actually went into this question when I started ScenarioX itself, because
Just in brief, like 2 points. Why we are moving from the classical computing into the quantum one? Just
well,
3 points.
3 points. First of all, we need to understand that we are solving real problem with the new technology that we are using, with quantum itself. So that's the number one. Is that the case? The answer is yes, because if you want to bring speed in your way of calculation, computing, quantum can actually bring that speed, which is the challenge, or one of the challenges that financial institutions are facing. So yes, the speed, yes, the precision. Now, one problem that we are facing, especially when it comes to technology, and I want to really stress on that, and this is also the challenge that many quantum physicists are really facing, is the fact that they don't understand the problem that financial institutions are facing. You see? So if you understand the problem, or if you are actually partnering with a domain expert, you will have the capability to understand clearly the problem that those financial institutions are facing, and then see which part of the new technology, machine learning, AI, or blockchain, or quantum cryptography, or quantum just computing, right? Which part of your process the new technology will actually help you to solve. But if you are just a physicist in the lab, it would be very, very difficult. But the answer is we are doing all this because we see real advantage. And those advantage will come from precision, from speed, from solving the real problem that, which are the real problem that those financial institutions are facing.
Perfect, Achille. Perfect. Thank you so much again.
So we always need to ask the right question, like how might we solve this challenge, or how might we optimize time? Yeah, so we need to always ask the right question before we go into the solution. So great. There is another question over here, is like, how can fintech help green businesses assess and manage environmental and climate risk? So
yeah. I can answer this question more in the sense of climate risk, because there have been more and more requests from regulator because we've seen what is happening in terms of climate risk out there to also do climate scenario. There we are talking about a real operational risk, but also long-term kind of impact of climate change on investment that institutions are doing. It could be on real estate, for example, especially the ones that are actually impacted by climate change. We've seen even in the Middle East region where we were not expecting to have a rain like crazy rain happening. We've seen in some country in the Middle East where it was raining so much that infrastructure were kind of very, very impacted badly. So it's important to do a simulation of those scenario, those climate scenario, and have the analysis of the impact on asset that we hold. And quantum can also help you to do that. As I mentioned previously, for simulation, you need to you can do it with random number, of course, but you can also use other technique in order to that quantum can help you to do it better. So yes, concretely, these are the case. Impact on climate change on real asset that you hold in your portfolio is something that the technology could do.
Great, thank you.
Going to I think the last question from Lionel Zafir. It's about what is the estimated potential business value? What is the estimated potential business value? For example, the cost saving, the revenue growth, the competitive advantages for the financial institutions that adopt the quantum technology early. So whenever I'm adapting the quantum technology early, what are the estimated potential business value for myself?
Yeah, I think this is a really, really great question because it really explain, you can actually find the problem that you're solving, but you have to see really what is the return on investment that you're doing in order to solve that problem. You see, because if you're solving the problem with a technology that at the end is actually at the same cost compared to the classical one, there's no reason to actually do all the change. You need to really see that the return on investment that you're going to make is going to be very, very valuable for you. So that return could be estimated in terms of cost saving, for example, to really see, okay, when I'm using this technology, it's going to help me to do things much more faster. But how fast? Is it going to be helping me to save maybe 50% of the cost that I'm actually putting, an effort that I'm actually putting in order to do this process every year? So if the answer is yes, you are actually good in order to go. Now, it could be also the potential in terms of revenue. When we are talking here about asset selection and allocation, guess what? It's going to impact the performance. How can we demonstrate that in terms of performance, we are really having a better alpha, for example? In that will be the way that we will measure if the technology is really bringing value and revenue for the one that are using it. So we have the cost reduction, of course, but we also have the revenue. We hope that we're going to generate actually what we call in finance the positive jaw, reducing costs, but also improving our revenue. Those are the two metrics that we always want to check. And we do the same when it comes to technology. Is that technology going to help us to do those, to have that positive jaw? But also when it comes to now the competitive advantage, because at the end of the day, if you're not managing very well your risk, guess what? You end up being the one being eaten by the other who are doing that better than you. We've seen that with Silicon Valley Bank. We've seen that with Lehman Brothers in 2007. So we've seen that with many other financial institutions. It's always about how do you leverage technology in order to do things much more better than your competitor. And technology at the end is really a tool that will help you to navigate much more faster. If you've seen what happened, for example, with Nokia, everyone know about Nokia. They didn't embrace, or even BlackBerry, they didn't embrace technology and end up completely dying when the smartphone were actually coming with Apple and so on. And this could also happen for financial institutions because this technology, as I mentioned in the beginning, they are very, very transformative, and you need to really embrace that very, very quickly. Because if you don't, others will, and then at the end, you may end up in a situation where, your market share can actually reduce because they will be more aggressive in the way that they're going to capture more clients, because they're going to do that faster than you. They will be more performing much more better, and then push new clients to actually subscribe to their fund, for example, because they are using technology that are actually performing much more better compared to classical. So this is the core of what it's about. It's about leveraging on technology in order to have this positive job, but also having a much more a competitive advantage that will make you stand out and be the best, I would say.
I totally agree. So technology will drive and enable faster decision making and capturing value very fast and drive impact. So yeah, technology is something else. Everyone needs to adopt it very fast. So I think here we have a last question, which is regarding all integration challenges emerging with quantum. How should classical financial workflows change to integrate quantum models? What is the weakest link? Is it data prep, problem formulation, validation, or explainability? To explain it, yeah.
Well, I think all of those points are very, very important, and they need to be tackled. I would say simultaneously, because as I say before, everything in finance is a bit like a process. You have to look at problem as processes, right? So you define clear processes and different steps. And for example, to do simulation, but you need to start by preparing your data. Well, okay, on preparing my data, what technology I can use in order to do the preparation of my data and do it more efficiently. And then secondly, when I do the modeling aspect, when it comes to do the calculation and the computation itself, what algorithm can I use in order to do that computation that could be really, really advantageous? That's the second step. And then after, how am I able to really explain to the people who are using it that this is really better? You need to really have clear, defined metrics that are simple for people to understand. For example, when it comes to value at risk, well, when I'm doing my computation of value at risk classically, and then do the computation of value at risk with the hybrid quantum, consistently I have a gap of, let's say, 10 basis points. This is easy to explain to people. Look, these two methods are actually giving you different number, and one is actually better than the other, right? So this is the explainability sometimes could be very, very difficult when you don't have single metrics or simple way of presenting the output. But if you have simple way of presenting the output, therefore you are in a position to comfort those that are receiving the result that you're showing.
Thank you, Achille. Again, still we have different questions. I don't know about the time, if we can do this, Iffat, or we can just respond to the questions
Yeah, sure.
or not.
We still have 13 minutes, so we're good to go.
Okay. There is a question from Laya. Laya, she's asking about would integrating the quantum algorithms with the AI, such as QVAR and QSAR, decreases the accuracy of these forecasts as AI is increasingly showing signs of um, hallucination and bias.
Yeah. Oh, well, okay. I think I need to break this question a little bit because um, when it comes to quantum value at risk framework that we've developed, it's really about an algorithm that will do the computation. So, and here we are improving a a process of doing that calculation. And how is it that we are improving that process? Is by leveraging on quantum random number generation. So that's really, and then from when you are using that, you are able to do a comparison between a classical and that quantum value at risk, the classical value at risk, and then that quantum value at risk. Similarly to um, a quantum conditional value at risk. So this is very easy to explain because when you do the computation, you see directly the result. So essentially, you're just improving one part of a very long process. And there are other parts of the process that we are also working on in order to do additional improvement. But only by doing that small one, you can already see some benefit. So I would say it's again about understanding what are the process that you're trying to improve and seeing exactly what the technology that you have today would actually help you for a specific part of that process. That's what I can say.
Great. We're having a lot of questions. I think it's a very hot topic right now. So this question is, how can future generations of students be effectively introduced to and gain hands-on experience with these technologies?
That's a very, very good question. And that's also one thing that we really love because we believe that,
Sorry to add something. This will come to the last question of Faisal. He's a student of a high school chosen as a finance major, and he's entering into the university next year. And he's asking, what advice do you have to choose for areas, subject in the university? So I believe these two questions related to each other somehow.
Yeah, they do. They do. It does. So and it's a very, very good question for me because you know, if you look like 15, 20 years ago in finance, what we were doing is using numerical approach or even now statistical model in order to do analysis. Essentially, we were lacking a lot of data, and therefore, what we were doing is to have sample, and then from those sample, we were then doing a generalization, you know. And then with computing power that we had with the cloud and so on, we start having to create a algorithm and machine learning algorithm with AI coming in, and we were able to then, instead of doing extrapolation, we were then using finding pattern in the data, and we were building that. We were building algorithm that will actually find those pattern. So you see, in terms of training, what has changed is that you people were focusing a lot in statistic regression analysis, but now you're moving into machine learning, neural network model that are actually built in order to do those prediction. And long run, what is going to happen is going to be like a kind of hybrid method, because I don't believe it's going to be fully quantum, essentially. It's going to be a kind of hybrid where, because today you still have your piece of paper and a pencil where you're doing the calculation in your, your piece of paper. And then you still have your kind of Excel spreadsheet that you're doing, but at the end, you also have the cloud that's there helping you to run very complex model. And long run, you're going to still have you have quantum computer. I put that in one slide there. I put like quantum everywhere, right? So in the beginning, we had the paper, and then we moved. Now we have everyone have like a computer in front of him, and then being able to build his own model. So long run, maybe I don't know, 50 years down the road, we will be able to master the technology of quantum and have computer that will actually work with quantum chip, right? So and then it's going to be much more fast, much more accurate, and everyone will be able to use it. So the question to those to the young generation, to those students, is that you have to embrace technology. You have to train yourself in order to understand what is happening, what is it that you need to learn in order to not to be left behind. The same that is applying to financial institutions apply to us as human, to learn how those technology will have, how we can contribute in order to understand what is happening with those technology, understand what those institutions that want to leverage on them want to do, and how can we show that we are able to contribute. So for me, it's about training, being curious, going out there, learn, and it's very easy to actually train yourself today. You can have courses that are out there, for the global innovation. Just by watching webinar, you will be able to see what is happening, what are the trends in terms of technology, what is it that I need to learn in order to be up to speed on those technology, and not being left behind. So yeah, that's my advice. Be curious. It's a lifelong learning process. So don't believe that what I've learned today is going to be enough for 10 years. 10 years, you need to learn again. If you look at my training as a mathematician at the beginning, but I've evolved, and I keep, I'm continuously learning, embracing new technology, and seeing what is happening, and it's actually very good for your brain.
Thank you very much. That's a good way to close the subject, that continuous learning is a must. It doesn't matter how old are you need to continuously learn, or then you will not be within the train moving forward. So we really appreciate your time. Thank you very much. Thank you everyone who joined us, asked questions. Everyone was really curious. And thank you, Alaa, also. Achille, thank you for your time again. We wish that everyone can give us their feedback. If you really like, the feedback, the pool is here. If you can please join us and give us your feedback. We would love to know what you think about the session overall. And then we would like to know if you would, whom do you want us to bring next session, if there is any certain topic or a certain figure that we can bring. So we would like to conclude this with a thank you. And this is a very informative community, and this is for everyone to come and gather information, see what's going on in the future, and disrupt the industry together. So yeah.
Maybe one thing, if I may, is do not hesitate to follow us. And you will learn a bit about what we are doing. There's a lot of announcement coming up for us, and you will know more about things that we are doing. And if you want, don't hesitate to reach out, and we'll be happy to to continue this conversation. So thank you
Sure,
very much for everyone thank you for the
Really,
invitation, and
thank you
really,
so
really
much,
appreciate it.
Achille. Thank you so much, Achille, for the very wonderful session today. Thank you so much to Iffat for all the efforts and for today. Thank you for all the attendees. We really appreciate it, and we hope to see you soon.
Thank you very much. Bye.
thank you.
Iffat, you want to add something? I'm sorry.
All is good. If you want, you can find a ScenarioX profile in the LinkedIn, I think, invitation, and you can talk to and explore more opportunities if you have.
Yeah.
Thank you.
Thank you
Have a
very
good
much.
one. Bye.